Hi, everybody. For those of you who are watching on one of my channels, I want to introduce Louise Nelson, who's here with me today. Louise Nelson is Vice President of Mortgage and Lending with Guaranteed Rate Affinity. They work out of our office at Coldwell Banker, and she's been a real blessing to have at the office and has helped me and all of the other agents so many times. Louise has more than 20 years of mortgage lending experience. She's worked with large and small banking institutions. She's owned her own business. She started a wholesale lending division for a local community bank. She's managed a successful team. She's also dealt with a lot of high-end clients and first-time home buyers, and she's super active in her community. She's been past president of the local Rotary Club. And the coolest thing, in my personal opinion, about Louise is that she sponsored a kid in Haiti for 10 years. That kid is now 10 years old, and she's been on 2 mission trips down there to test kids and teachers for eyeglasses and deliver eyeglasses for kids that otherwise would not be able to see and study. So thank you so much for being with me, Louise, today, and thank you for answering some of the questions that so many people have right now about mortgages.
Thank you, Renata, and it's my pleasure and honor to be here. I enjoy working with you, and for those of you who know me, I would like to introduce Renata to you. Renata is a licensed realtor with Coldwell Banker, and she specializes in virtual and remote transactions, which is really important in our environment. She began her career in 2007 in California, where she worked with buyers and real estate investment groups before she moved to Florida, where she is now working with buyers and sellers successfully. She's also a polyglot, which is a new word for me, which means she speaks 4 languages. And what's really amazing about Renata is that she is a former national hang glider champion from Brazil, where she held many national records over a decade. So it's been kind of cool to learn a little bit more about each other in this environment. And again, I'm just very honored to be here with you, Renata. Thank you.
Thank you, Louise. It's great to see you, especially since we're not going to the office.
I know.
So, yeah. I was wondering, what are some of the changes that have happened recently, with the COVID-19 to the guidelines of government and conventional loans? Can you tell us what some of the changes have been?
Absolutely, it's a great question. And actually, some of these changes were just announced to us yesterday. And there are a few changes, and it's specifically to our government loans. Fannie Mae and Freddie Mac, it's really business as usual. We are, still able to close actually all products and programs within 30 days, which is really amazing, and good for our industry and for our agents as well, and our clients who we represent. But regarding FHA, where the largest impact is in the past, recently we are able to do loans with credit scores below 620. Currently, we are at this point, it's on hold, any credit scores below 620. And if a borrower has a credit score of 680 or higher, there is no impact at all to the guidelines. The guidelines remain the same. So really the only changes are with those individuals or borrowers that have the lower credit scores, and it's specifically if a borrower has a credit score from 620 to 639. They are no longer allowing gifts for the down payment, closing costs, and reserves. So all the funds into the transactions, just with the lower credit scores of the 620 to 639, are requiring all the assets to be the borrowers, no gifts. And then we also have, if the borrower has 640 to 679, just a little bit lower on the back end ratio, which is at 45%. But other than that, anything above 680, it's business as usual with the FHA. And then the only other impact we have with our down payment assistance programs. They are requiring anyone with like the grants, the bonds, Chenoa Fund, they are requiring a minimum of 680 credit score on those. Now, This is a change that we've had just as of yesterday, and will this be a permanent change? I don't know at this point, but hopefully this will, loosen up once we get to a more normal business environment. But these are the changes for today.
Excellent.
Oh, yeah, one other thing, Renata, there are some of our investors that have gone outside the box, like the bank statement programs. They put a hold on taking new applications for now for at least the next 2 weeks. But conventional financing, government financing, VA, FHA, VA, we're still moving forward and closing those loans successfully.
That's really good to know. There's so many questions, so it's always good to have some answers right now.
Yes.
So as far as, the situation of having to do everything virtually, what has Guaranteed Rate done, to support clients during this time where we're supposed to maintain social distancing?
Absolutely. Actually, I've always said Guaranteed Rate Affinity has some of we're leading in technology. We have, like on my website, I have a button that says apply now, and from pre-approval really through closing, we can do everything online and remotely, and it's done very well. It's very smooth. The pre-approval process, the application process, they can do everything online. It walks the client right through application, and then they can upload their documents, their supporting documents securely to a secure website. Our underwriters, our processors, our closers, everyone is working remotely at this point. We've had no blip as far as getting things done. We're still able to close in the 30 days on purchases. And as far as the closings are concerned, because I know a lot of people are concerned about, oh, I have to sign this and that. We always had the flash close for our clients, in which they were able to sign electronically 90% of their closing documents, and then they would wet sign the remaining documents at the closing table. But what we did is we expedited the e-notary. So now we have a notary that comes online, very similar to what you and I are doing, where they can sign everything electronically. So there doesn't need to be, fortunately or unfortunately, any human contact with the closing. Another concern that, some borrowers had was, well, what about the appraisal? Well, a lot of our files are receiving the appraisal waiver, in which we do not need to do an appraisal. Or we can do a drive-by. If the file allows us to do, we can do a drive-by. And if we do need to have a full appraisal, then our appraisers will work with the homeowner and ask them to take pictures of the interior. So there is a workaround for the appraisers who actually have to go inside. They no longer have to do that. So they figured it out, and they figured it out in a very successful way. So from start to finish, we honestly, in this environment, we're in a good position. That we do not need to have human contact, and we can move forward.
That's awesome. Yeah, it's great to see how adaptable companies and, a lot of professionals in our industry have been. So I'm really excited to see that. And last question, interest rates, with the Feds lowering interest rates. I know that some people think that, oh, does that affect my interest rate? And you're much better at explaining this. So where are the interest rates?
Yeah, well, let me just say this. Rates right now are phenomenal. On a 30-year fixed rate, we're in the low threes. So historically, they're the lowest they've been, which makes it great for home buyers who want to purchase. It gives them more buying power. Rates are great. I know the Fed, they lowered the rates, and a lot of people are like, oh, that affects mortgages. In some ways it does, and in some ways it doesn't. But when the Fed lowers their rate, what it really impacts is more of the short-term financing or the adjustable rate mortgages. So if you have like a line of credit, I believe prime was at 4.25 and it went down to 3.25. Did it impact mortgages? It may have, but it's not a direct impact. It doesn't mean that mortgage rates drop to zero. No, but you know, there is an impact more with the consumer loans than with the mortgage loans. But rates are still great, and a great reason to, you know, especially with the market the way it is, if you have investments, it allows you to, you know, really borrow more money at a lower rate, which helps everyone.
That's great. That's great. Well, thank you so much. I don't want to keep you any longer, and it's really helpful to get some answers to our people out there. We're going to have a link to my information, to Louise's information right below this video or above, wherever, depending where you're watching it. And I just hope you stay safe, Louise. I hope you all stay safe, and just know, you know, we're still in business, and we are, whatever we can do to help, we're here for you.
Thank you, Renata. It's been my pleasure. Anytime.
Thank you.
Thank you. Bye.